Very good morning, everyone. Charles here, Frgnt Daily Chart Analysis. The time is just approaching 5 minutes to 10 here local in Milan. The date, Thursday, 16th of April, 2026. Very good morning to you all. A little bit of a breakdown coming your way, as well as what I determine as a couple of nice, there's the alerts going off already, a couple of key elements in how you can do your best to try and safeguard yourself against taking trades a little bit prematurely. Something that I'm very transparent about, something that I had adapted my trading strategy in order to get the first, I would say, the first entry in the move, take the first position in the move before the move is developed. That's fine to do so long as you're able to understand the price in your opposite direction has not been broken. For a good example, we can start here on Euro US dollar. Of course, there is an area up at these highs where using the higher time frames combined with the DXY looking potentially in a position now to roll bullish. What's important for me to understand is, do I have a similar area on a cross pair where I'd like to be looking to go short? And in this instance, yes, I do. So we're on Euro US dollar, and of course, I can see a short setup potentially pending. Using that higher time frame, we're in that higher time frame weekly order block, refined daily, refined 4-hour, where price is struggling, and indeed failing to break above. You can see that very clearly here on the 15-minute time frame. So therefore, let me make that chart bigger for us all. So, of course, if price doesn't break these key areas, I must understand that price on that intraday 15-minute time frame is still, and even on the 4-hour, to be quite honest, is still very much so bullish. Therefore, any position that I take short without seeing those structure points broken, I must understand that price is simply, after it has now made, and we can see quite clearly to the left, we've made a higher high. Anytime price makes this move towards the downside without breaking these significant levels could just simply be a higher low for a higher high continuation. So the only way that I can really look to safeguard myself on those intraday time frames, i.e. the 15, let's speak about first and foremost, is to understand if price is going to look to break those significant areas, I should say, where naturally I'd be looking for price to bounce from. So even for me, as I mix my strategies on the chart, so for example, I look at Asia range criteria, which doesn't take into any of the higher time frame bias. So if I was to look at taking this as an Asia range trade, then absolutely I'd be looking in and around this area for reaction to fill Asia back up to those highs. However, it's not something that I'm interested in at the moment, and the biggest reason for that is I am in that higher time frame weekly order block. So for me personally, the higher time frame weekly order block is going to trump my intraday perspective, particularly when trading within it. And what I mean by that is if I bring price back up to that for the all time frames, you can see that price on that weekly time frame, this is the only weekly order block available. Therefore, I am expecting price to have the short reaction higher time frame from that area. Of course, I wouldn't mind taking a long into it, providing I can manage my position whilst I am in that trade. However, what I can't do and what my strategy prevents me against doing is taking long positions against the higher time frame order block. So therefore, I'm just going to use this area as a guide and call it what it is. It's a structure point. And the way that I come to that conclusion is, as a result of that most recent high created, I'll simply work my way down that leg and understand, is there any imbalance in and around this area where I could determine is after that higher high, potentially the higher low for the higher high continuation, as I've said before. So the way that I will lead with this is based on the title, how to safeguard yourself against taking pointless positions. Well, of course, what I've been doing most recently is understanding that the phase of the market is, of course, bullish. However, what I've been looking to do up at these highs, for example, is look for my entry criteria, which is not so much the setup. I've been looking for my entry criteria from an area and understanding that, okay, now I must be break even by the point in time where price is looking to turn around, if not a lot sooner than that. And I have been doing that. I've been going break even very aggressively, and this indeed is an aggressive type of trade. However, what also you have with aggressive types of trade, which that particularly is just an aggressive type of entry to then fulfill potentially the trade itself. Now, what we also have is different types of setup. So as opposed to just speaking about an aggressive type of entry, forecasting the setup to then align, what we now have is just simple basics. Wait for structure to be broken, come back up into an area of imbalance that is available or has now created that break of structure. As I speak, I can see that there is a 15-minute order block up at those highs that hopefully if we get that break of structure, here will be a nice element where I'll be now looking for my entry criteria to be fulfilled before then allowing price to roll over continued shorts. Nevertheless, as you can see, based just picture, and sometimes it's not just about the structure. For me, it's always been about how does the picture look. If I was to put this picture in front of you, what you would say is, well, I can't really determine whether price made that higher high from here, or did price in fact make the higher high from here? So then the question goes, if someone that I'm mentoring was to ask me, well, what is the better structure point to wait for before I take a short position? Of course, it's here labeled the key structure point. And why? Well, that is your safeguard. That suggests to you that an area in the market, the most recent potential higher low area, we're not going to just fixate on a particular order block. It is an area, because potentially if this is the higher low, price could look to turn around after this higher high created anywhere in and around these areas, even down to these wick lows, before making that higher low to then provide potentially a higher high. So the best option, and I've got it here labeled the best, is to wait for that key structure point to be broken. Of course, as an intraday trader, it may well look as if your trade has now passed. However, it is your strategy based on the confluence, and of course based on patience and discipline, to then await your setup, which it would have done, and then allow your entry criteria to then be fulfilled and take that short. So that's what I'm waiting for today, actually. I'm waiting for price to break any one of these structure points and then give me a pullback. The reason why I'm happy to explain the best type of entry, but also take, let's say, the least favorite type of entry, is because I'm able to manage my position very aggressively throughout the day. Either that be via my phone, or if I'm on the laptop, I recognize that I should be going break even at certain points. However, as I've mentioned, if I'm mentoring you directly, until you show signs that you understand that the basics, then we can start to move towards the more advanced level of mentorship, perhaps, or the advanced method of how I showcase my charts. And many people don't understand my charts, as I've got many areas on those charts, but more often than not, you do require confirmation. So the best elements have been described. Of course, once price breaks those lows up at this high, of course, that becomes, for me personally, potentially a sell limit order. Here, I'll still require to see confirmation before taking a short. So that's EU for me today. Looking at the DXY, so can we compare the DXY as that confluence to understand, well, what are we looking for? Well, of course, higher time frame, I believe, based on the technicals, the DXY could well be heading back up to those highs. We've had this break of structure here on that weekly time frame above this area, which is vitally important. And of course, after a higher high, we are expecting that higher low. So I'm not surprised, to be quite honest, to see the DXY want to pull back. And what's great is towards the end of the week, we've had what we will get towards the end of the week is the correction, I should say. So we've had pretty much an entire week of the DXY making those lower lows and lower highs. And now for Thursday and Friday, I'm expecting price to want to trend back up towards those higher time frame 50 EMAs. Although price is against those EMAs to the downside, it's very unlikely we're just going to continue pushing for an entire week, particularly as we're now into higher time frame order blocks, just like on Euro US dollar. So on that weekly time frame, we can see here the only weekly order block price is now in that area, and naturally I'm looking for a reaction towards the upside, potentially not to make a higher high, but certainly a good enough reaction to allow me to look across my cross pairs to see if I can get a reaction in the opposite direction. For example, Euro US dollar. Now, again, how am I going to use this as confluence to understand that is Euro US dollar ready? It's the same principle. I understand on the DXY, as I've just mentioned, we're very much so bearish, and we can see that based on the 15-minute time frame. These structure points, we've made lower lows, we've come back in, lower high, lower low confirmed. Therefore, again, I have areas here in the market. I have my best area here, of which I will determine the most recent low created has most certainly come from in and around this range. There's no hiding that. However, if we look at this, let's say on the 1 minute or the 5 minute time frame, I can understand also that once this area is broken, that is still a break of structure of some sort. Therefore, when price comes back down to the imbalance left behind, lower time frame confirmation is all I require. However, if price breaks these highs and price comes back down to these lows, it's be somewhat more of a limit order with the expectation then that the DXY is going to want to revert straight away from the imbalance left behind. Now, if we use that with Euro US dollar, we're having exactly the same. We are currently breaking the first structure point. Therefore, if price comes back up to these highs, I'm going to need to see confirmation before taking a short position. Much like on the DXY, I've just explained exactly the same. So that's what I'm looking at the moment on the DXY. You can see my alert here, ready to go off in a moment, so I better move that slightly higher. And I've got the alert as it approaches the order block left behind. So I'm going to use the DXY heavily, as I always do, as confluence to potentially look for a Euro US dollar short. Again, if the DXY absolutely tanks, it's not the end of the world. And what I'm going to see is just the setup be created a lot better on Euro US dollar. At the moment, I can't really say that we are ready for a turnaround. All that I have is price is in an area of confidence based on higher time frames, based on my technical analysis and top-down analysis. That's one thing. So that's the overall picture. Everyone should be able to have a good forecast on where they believe price action could go. Nevertheless, we then must implement our strategy on top of that and await the setup. Once the setup is confirmed, then simply await the entry criteria. So that's what we're doing at this time. We've got the areas in the market. Now it's simply just to await the setup and then await the entry criteria and take the trade with no expectation. What else do we have on the markets today while I'm here? So we spoke about DXY. Let's have a look at US dollar CAD. So knowing that we believe that DXY could look to move to the highs, that should mean that US dollar CAD should also look to the highs. So US dollar CAD can also be a nice confluence to say, well, is EU ready for shorts? Is the DXY ready for longs? What we have on the DXY is very similar to what we have on the US dollar CAD is very similar to what we have on the DXY. We are now operating within that higher time frame weekly order block. So unfortunately for me, or I should say fortunately, as mentioned before, the fact that we are bearish is one thing, and I understand continued shorts until proven otherwise is most certainly the best, or not so much the best, but trading with intraday perspective and that 4-hour time frame is the best, in my opinion, that you can do. Therefore, looking for shorts on US dollar CAD, I can quite understand why traders might be looking to do so. However, my strategy unfortunately prevents me from taking short positions for the same reason I've explained previously. I'm in a higher time frame order block where I foresee where price should be looking to reject that order block anywhere within it. Therefore, I'm happy to trade down towards it, but what I'm not happy to do is short once I'm within it. So therefore, what I've done, I've marked this up simply as a trader would if I was going to be looking for shorts. If the shorts, of course, amount, then I know that the DXY is not then ready to go long. So what I've got on the market here is once price breaks those areas that I would naturally be looking for a short from, providing I wasn't in a higher time frame order block. Once I then see that those areas have been broken, I'll just apply the same ethos. I'll have an area of imbalance down at the lows, which I'll look for price to want to gravitate back towards. There is an imbalance just here at the minute, so what I can look to do is place that on the chart just for now and simply see if price is going to break the areas of which that I'd be looking to short from. Once I get that break of structure, I'll be expecting or forecasting exactly the same. Not that tool. it would be this: wait for price to break the most recent lower high that created the lower low, make the high, come back into an area of imbalance. I'd then be looking for a lower time frame break of structure, or my entry criteria, bullish engulfing 15-minute candle imbalance fill, to then look to take price to the highs. Now, would that make sense based on my confidence on the DXY? Well, if US dollar CAD pushes up, the DXY should also start breaking some structure points. When the DXY starts to roll back down, it's not that, oh no, I believe the DXY is now looking to make continued lows. I will then have the expectation based on the forecast that the DXY is simply now trading like every other pair. We can see to the left, DXY makes very clean lower lows and lower highs on that 15-minute time frame. So once those points of interest get broken, I'll simply be expecting that pullback for continuation longs on the DXY, and then in contrast, I will have exactly the same on US dollar CAD. So no movement for me at the moment. They're my favorites moving forward. Sorry, my phone ringing. Get rid of that for a sec. They're my favourites moving forward. I'll use the DXY as heavy confluence for that. US dollar CAD, of course, I understand that bearish on that 4-hour time frame, but higher time frame weekly order blocks, it's looking quite nice, I must say. So I'm always going to leave with the higher time frame, and I'll use my lower time frames to give me that confirmation that price is ready. What else do we have while I'm here? So that's DXY, US dollar CAD, EU. Do I have AU marked up? Yeah, AU is an interesting one. One I'll quickly go into. We are trading within a higher time frame daily order block. With that said, we're gaining that confluence by way of wick imbalance. This tremendous wick that occurred on that weekly time frame. That's everything you need to see. And in my opinion, as a result of this low in the market, I believe that after a low, of course, it is what it is, a lower high for a lower low continuation. So we have every expectation that that wick imbalance will provide the liquidity to drive price lower. However, I can't guarantee that. Therefore, I'm going to need to wait for a high degree of confirmation before taking a short position, particularly as that 4-hour time frame is incredibly bullish. So, Charles, what are you waiting for? Well, I'm waiting for something different to come out in the market. Now, although this is marked out as is, I wouldn't be taking a position on AUD US dollar myself. If I got the choice, it would be EU to take, not AU. Now, this is just going to be a nice guide to give me the confirmation, the confluence for potential EU shorts. Now, we have exactly the same, a key area in the market where I can safely say that price has made a push from that area. So if that is broken, then of course I'd be happier or more confident to expect the pullback short. If it hasn't, I shouldn't really be looking, or certainly this area, if this area isn't broken, then I'll be quite confident then that potentially EU isn't ready also. So if I'm not able to take EU, then how are you going to look to manipulate AU? Well, what I can see straight away is an area in the market where price is failing to break below, even on that 4-hour time frame. So I think the safest thing for me to do, and the safest thing that I will be doing, is waiting for a bearish engulfing candle from that area, or at least a bearish close from that area. Now, I know it sounds as if it's playing the long-term game, but we have to. We've seen, based on the economics and those fundamentals, that if you are slightly jumping the gun, of course you will. There are going to be some trades where you're going to be hitting quite dramatic risk rewards. However, playing and trading as the long-term plan, the long-term strategy, and the long-term game, there's no need to do that at the moment. Just got to wait for a bearish engulfing candle to come out of that area, show me something different. Once I have that bearish engulfing candle on the 4-hour time frame, you've guessed what it's going to look already on the 15. I'm going to have significant breaks of structure on that 15-minute time frame, and it's going to look a hell of a lot more appetizing and appealing. Once I get that, then of course I'll be looking to manipulate some of these lower high areas in which price could well give me the reaction. As well as that, once I get that 4-hour bearish engulfing candle, I can then start building my base up by way of order block selection, not just wick imbalance. So with that bearish engulfing candle, I'll then be able to select a 4-hour order block. Once I then superimpose that on the lower time frames, I'll then be able to start using my higher time frame directional bias to take a position. So AU for me is not ready at the moment, but for sure I'm going to use it as confidence for even the fact that it will show signs if the DXY is ready to go long or not, and it will show signs whether I should be ready or not to take Euro US dollar short. So I think it's all shaping up for potentially a nice day using the confluences that we have on side in hand, and at the minute it's just going to be one of those patient kind of days where you get on with your day, and if your alerts go off, i.e. structure breaks, i.e. pullbacks back up the highs, and that's when you're looking to execute. But until then, nothing for me personally. So thank you very much everyone for listening to this quick breakdown using the DXY, how to potentially safeguard yourself against pointless losses without waiting for breaks of structures. And if you are not going to wait for those breaks of structures and you're going to be aggressive, if you're going to be first in the trade, be sure you, in my opinion, not financial advice, you've got to be the first person to manage that trade as well, and expect the inverse of your belief, i.e. I'm expecting shorts from this area, but based on the 15, I can understand why longs could take place. So thank you very much everyone for your attention. Appreciate your support as always. Take care. Ciao.